And it is 4:04 p.m. Eastern Standard Time on Tuesday, November 9th. And we're going to look at the S&P, and we're going to look at some the good, the bad, and the ugly, and kind of what this means in the big picture, small picture, medium picture, etc. This is being brought to you by FreeChartVideos.com, using time-honored techniques to understand modern markets. This video is for educational purposes only and is not intended to be any form of investment advice. I draw lines on charts, but you have to draw your own conclusions from your own due diligence and make those investment decisions that are suitable for your financial situation. I'm not a licensed professional, just a guy that draws lines on charts. We got something interesting to look at in the S&P. First thing I want to do is back off a little bit, remind everybody that we've been following this channel that is defined by these dark green lines. And I just want to remind you, we're still well within that channel. As a matter of fact, we are beyond this red midway marker where it appears that we bounced today during the heavy selling in the afternoon. I'm not saying for sure that that means we're out of the woods here, but you can see that it looks as if we'll get above that red line, spend a few days there, then we'll dip below it, then we'll get below it and tag this line, spend a few days underneath it, and then we got above it, actually broke out barely above the this top resistance line, but that did not hold. We formed a pattern that I want to look at now in detail. In yesterday's video, I had identified what appeared to be, and if you'll remember, I want you to go back and listen to the video. I first said this is a consolidation, then I said no, check that. This is a congestion area, because a consolidation means it does continue upward, whereas a congestion means it could either be a consolidation or a reversal. And in this case, it looked like the futures were going to open up nice and strong. We actually opened above that, but I want to point out something to you. We did not have a lot of touches. We did not spend a lot of time in this pattern, and I thought when that happened and it pulled back and we got under, I said, you know, that's just maybe a little premature, because you don't really even call this a touchback here. By the way, in yesterday's video, I think, well, that's not exactly where I headed. I think I was drawing this line from here. Okay, it's a very small distinction, but after the action this morning, I altered that to there. And why did I do that? Well, when I saw this bounce, I said, you know, I'm going to give this chart the benefit of the doubt, because it really isn't clear where in this area, after this solid run-up, where exactly support was tested. So I just changed that line a little bit, and I actually think that's probably a better line when I see some of the things that went on today. So anyway, what happens is we broke up, looked like maybe a breakout, then we came back down, and then I redrew my line just a little bit, came back, and I was thinking, come on, break that center line, but it didn't. And you see how that center line in this pattern has acted. So it didn't break it, came down, broke support. About here is when I went to go pick up my son from school. It seems like every time I go pick him up, I come back and, you know, the wheels have come off. But then it rallied back. It really sold down hard, which is okay. And I'll tell you why I think that's okay. Now, looking at this pattern, I'm going to adjust this line. I'm now going to say that is our area of resistance, because this was what failed today. That 1227, I believe it was touched or almost touched, but it did not give way. Same thing happened back here. So that is now the line in the sand. Now you might look at that and you say, well, gee, you know, that's kind of bearish, isn't it? I said, well, it wasn't that long ago that 1196 was the line in the sand for the bears, and it wasn't that long ago that 1123 was the line in the sand for the bears. Let's look a little bit more closely at this pattern. Just want to zoom in to where we can get a little bit more of a stretch out of it. There we go. I want to show you what's interesting. You know, we've talked about how you measure your expected moves off of these patterns. And what you do is you go for the spot where you make the first reaction, or the first pong, whatever you want to call it, the first hit, and then you measure back down to the bottom boundary, or depending on where you start, you know, because it could be either top to bottom or bottom to top, and you say that is the minimum expected move that should come from either an upside or a downside breakout from this pattern. Now let's add this. And I usually move them along to where I say, well, instead of at the point of the breakout, I will move them to where the bottom is to see if it looks like maybe this has satisfied the pattern. And to my eye, this move this afternoon, that really strong downdraft, has satisfied this reversal pattern. That is not to say that we're out of the woods. You know, it's very possible that we come back down, test 1196, or even the bottom of the channel. So anyway, this is kind of where we ended up the day with the S&P. It was an ugly day. I think the primary ugliness was probably due to my picking up what I thought were some cheap shares of DRN in the middle of the day. And I think I got these about here, and I thought, oh boy, that's pretty nice. I'm going to be in pretty good shape with those. And boom, the real estate really was the primary contributor. But I'm going to be patient. I don't think I'm going to lose money on those shares. So anyway, appreciate you watching this. Please, when you get a chance, I'd also like it if you could stop by the website and take a look, freechartvideos.com. Come by there and meander around. I'm dependent upon traffic to keep this absolutely free. That is my intent. That is my full intent. So tell your friends, stop by, look around. Thanks. Oh, one more quick word. I'm going to be traveling the latter part of this week, so may not be able to do this, or at least to the level of what I do it here when I'm on my desktop. So I'll be offering some kind of update, but it may be very brief. Y'all take care.